The Economic Program Oversight Committee, EPOC, under the co-chairmanship of Richard Biles and Bank of Jamaica Governor Brian Winter, has been keenly monitoring Jamaica's progress under the Extended Fund Facility with the International Monetary Fund (IMF). So outstanding is their performance that the new Finance Minister, Audley Shaw, has given the team the green light to continue their operations. With that stamp of approval, EPOC continues to update the country on what's being done to meet the IMF targets. At its monthly briefing in March, EPOC said Jamaica's net international reserves at the end of February was in a healthy position, $2.2 billion. That's $600 million ahead of target. Tax revenues at the end of January was also ahead of target by $3.8 billion. It was budgeted at $319.6 billion, but $323.4 billion was collected. The best performers: tax on interest, company, special consumption, and general consumption taxes. However, customs duty, tax on dividends, and telephone tax did not live up to expectations. Even though tax revenue did well overall, as at February,
what we see is that the total revenues are short $1 billion. And that's not because of taxes. Taxes are actually doing quite well. But the grants lag by $3.2 billion, and the bauxite levy lags by $2 billion.
This has contributed to the primary balance, the difference between tax revenues and expenditure, excluding debt payments, recording a shortfall of $1.6 billion. Nonetheless, EPOC is optimistic that the country will meet the primary balance target.
Especially since the Minister of Finance has given us the assurance that in February they pull back on the expenditure. So I expect that the small 1.6 difference between the primary balance, actual and budget, will not be a problem for us.
Expenditure as at January was $1.6 billion more than budgeted.
Largely contributed by the overspend on wages, which arises from the negotiations that were concluded a couple of months ago, but also on programs, which is everything else that government spends money on. They're over by $2.3 billion.
Since expenditure was curtailed in February, when the figures are released, they should be more in line with the budgeted amount. EPOC also shared other pieces of good news for Jamaica's economy. The country's trade deficit decreased by 12.2% for the January to November 2015 period.
Largely, the trade gap is being closed by the price of oil and the importation of food being less than before.
Between January and November 2015, total remittance inflows to Jamaica also increased by 3.2% over the same period in 2014. The government of Jamaica remains committed to meeting its obligations with the IMF.
To ensure that we continue on the path in terms of the IMF program that we're under, there are goals that we have to meet, there are targets, and our plan is to meet each and every one of those. But alongside that, as we've always said, we have to have a robust growth agenda in Jamaica.
The efforts of this administration to spur growth, I think, is welcomed, and we certainly hope that it bears a fruit that I think every Jamaican wants to see it do.